Hello, my name is Victor, and in today's video, I want to do a deep dive into PayPal's fundamentals. And I'm talking about all of their reports. Their most recent earnings report, we're going to analyze their balance sheet, and also look over their cash flow statements. And be sure to stick around until the end of the video because I will provide my projections for PayPal stock through 2028 and also provide an update on the SoFi put I sold last month. A lot to get into in today's video, so let's not waste any time and get right into it. But before then, why exactly do I suddenly want to talk about PayPal, a stock I've never talked about here on the channel? Well, the reason for that is because about 2 years ago, back in 2024, I sold a LEAPS option on PayPal. And for those of you who are new here, a LEAPS contract is essentially a call options contract, but it's generally over a year or longer. In my case, I paid about $2,000 back in 2024 for a LEAPS option contract on PayPal, and it's set to expire here in the summer of next year. So I've got about 200 days left in the contract, but unfortunately, I'm down 30% on that LEAPS option as of today. And 2025 has not been a kind year for PayPal. The stock is down 28% year over year. And in today's video, on top of discussing why my LEAPS option is doing so poorly, I want to answer the question, why has PayPal been struggling so much this year? Well, let's go ahead and get started here with the analysis, and we will begin with the earnings report, which came out in October of 2025. And right off the bat, when I had a look at this report here, I thought, wow, things look amazing for PayPal. Their revenue was up 7% compared to this time last year. Their earnings per share, so net income, was up 24% compared to this time last year. So right off the bat, I was incredibly confused because all of these numbers look amazing. I even highlighted in blue here in the report, their expenses have been kept in line. And whenever that happens, plus you have revenue growth, you're basically guaranteed to have net income shoot up. And that is exactly what happened. So right from the get-go here, very impressed with PayPal in their most recent quarter. But let's keep moving here with the analysis. Because when I then had a look at their balance sheet, that is where I started to ask a couple of questions here. Now, to be fair, their cash is up 35% compared to this time last year. Love to see it. But when I had a further look down several of these lines here in the balance sheet, assets and liabilities in line, so not much going on there, which essentially means that your equity is virtually the same. Again, for those of you who are new here, equity is assets minus liabilities. So if your assets nor your liabilities change much, your equity will also not change at all. And that's exactly what we're looking at here with PayPal. And for those of you who saw my analysis in Meta, you would know that this number here circled in red is the debt to equity ratio that I love to have a look at whenever I'm analyzing a company's balance sheet. You get this number by dividing the company's total liabilities by the stockholder equity. And I have it circled here in red, big old number, because I did not like what I saw here. Almost a 3 for the debt to equity ratio, when ideally I want to see a number here that is below 1. Anything that's above a 2, and you need to start asking questions. Because unless it's a company like Johnson & Johnson where you're not really expecting growth, it's a very steady company, but they're not going to be exploding numbers here anytime soon. With PayPal, I kind of wanted to see this number be lower, definitely at least closer to 1, because I want to see PayPal growing in the future. But based off of this number here, almost 3, I'm starting to ask, okay, well, are they not focused on growth? Do they have too many liabilities here on their balance sheet? Should I be concerned? Did they bite off a little bit more than they could chew when it comes to debts? A lot of questions here, but let's keep it moving and we can come back to that here later in the video. And whenever I'm analyzing a company, I cannot finish my analysis without having a look at the cash flow statement, because that is where you can have a look and see exactly what the company is doing with their cash on hand. When I had a look here, operating income is up 25%. Love to see it. And going down the lines here, this first one in blue is up 40% compared to last year, a massive jump. So after I did a little bit of research, because I definitely wanted to know what exactly was going on here, I found that it's basically loan receivables. So they are basically buying up loans now so that they can sell them later. I am almost certain that the new CEO, Alex Chris, is going to hope to sell these for a profit in the future. So a massive jump compared to last year, but not something that I'm entirely too concerned about at the moment, because it's going to be something that hopefully, again, brings in some profit in the future. But when we finish up the cash provided by operating activities, that is down 20% compared to this time last year. Not something that I wanted to see. And I circled this part here in blue also when it came to the financing activities. But again, after doing some research, that is basically a collateralized loan that PayPal did in order to bring in some more cash, which explains why there was so much more cash on the balance sheet. So again, circled in blue, I just wanted to highlight it. But really, after having a deep dive in here for the cash flow statements, I can see why PayPal has not done too well in 2025. Not only because of this report, but because of all three. When you have a look at all of the bottom lines here when it comes to the operating cash, your investing cash uses, and your financing cash uses, I circled everything in blue because there's not anything wrong, but there's not anything great either. And for a company that is, in the fintech sector, you really want to see a little bit more excitement when it comes to these reports. So in summary here, after looking at the reports, again, nothing is wrong with the company per se, but there's nothing great or exciting. There's no kind of story going on with PayPal. And unfortunately, in the stock market, a lot of the times you need some kind of narrative to bring in investors. Let's continue on with our analysis. Now I want to have a look at the price to earnings ratios, and let's have a look and see what's going on in this sector. And when I had a look at the PE ratios, I found that PayPal's trailing PE is a 12, which is incredibly low, and their forward PE ratio is currently sitting at an 11. When I did some research and found a fair PE ratio for PayPal over the last 4 to 5 quarters, I found 17 to be a fair PE ratio. So as of right now, just based off of price to earnings, PayPal is looking fairly undervalued. Then I had a look at their last quarterly report. I had a look at their 10K to see how they were doing over the last couple of years. Again, research that I love to do and want to do. So if you are enjoying the video, and as a thank you for doing research here and providing some numbers, if you would like to give me a like, it helps out tremendously. But keeping it moving here, my PayPal projections through 2028, I have revenue growing on average 7% a year, which is, again, not anything exciting, especially for a company in the fintech sector, but I'm going to keep it conservative. That's how much their revenue grew in this last quarter. That's how much revenue grew last year. So that is what I'm basing that number off of. When it comes to their projected EPS over the next couple of years here through 2028, I have 11% per year on average. Again, Alex Chris has mentioned that he wants to keep PayPal lean, clean, keeping expenses down, and buying back shares. So I really do think that that net income could potentially be higher if PayPal is able to execute. But again, I'm going to keep it very conservative because, like I always mention in these analysis videos, I would always prefer to be on the side of caution and say, okay, well, I'm going to expect this number and then be pleasantly surprised if they do better, instead of basically doing a hope analysis, expecting amazing results. And then if they fall short, well, it was my fault in the first place, because you do not want to mix emotions whenever you're looking at numbers. Keeping it moving here though, my bear case would have PayPal up 18% on a compound annual growth rate through 2028, and my bull case would be up 34% on a compound annual growth rate over the next 3 years. So based off of these numbers, PayPal is looking incredibly undervalued to me. If the stock market in general and on average can bring you about 8 to 10% per year, 18% on my bear case, I have to get into this stock. Like, those are amazing numbers, and that's with me being incredibly conservative. While yes, it is fair to say that when you had a look at their earnings report, the balance sheet, and their cash flow statements, there were a couple of questions. And you could even say that they had a couple of things that might even be concerning. But based off of just price to earnings and projections through the next couple of years, PayPal is looking really good at their current price, a little bit over $60 per share. My bear case has PayPal at a 13 PE ratio. As a reminder, their forward PE ratio is currently at an 11, so not much higher than what analysts are projecting, and that would still have PayPal over $100 by the end of 2028. Not too shabby considering we're just above $60 per share right now. My bull case would be at a 19 PE ratio. So PayPal, to be honest with you, hasn't seen anything above a 19 except for maybe once out of the last 5 or 6 quarters. But again, if they are able to execute and focus on increasing net income, I can absolutely see it. Because ultimately, what drives a stock's price is their earnings. A company will rarely, if ever, go down if they consistently, quarter after quarter, bring in a higher net income than they have done in the past. I mean, there's just no way around that. And with a 19 PE ratio through 2028, that would have PayPal about $150 per share, well over a double up from wintertime here in 2025. So, okay, PayPal's, reports, not that exciting, not really much going on. Their last quarter was pretty impressive. Revenue is up, earnings per share up, great. Their price to earnings ratios look incredible right now. So I'm still kind of on the fence because we have one side that is telling us one story, making me hit the brakes a little bit, asking a couple of questions. But based off of the price right now, it does seem like PayPal is undervalued. But what's really selling me is that PayPal just announced that they will be paying a dividend now. They are going to have an annualized dividend of 56 cents per share. That is a current yield as of November of 2025, about 0.9%. So nothing crazy, but hey, you got to start somewhere. The first dividend is going to be paid on the 10th of December, so I'm going to miss that first dividend. But with a payout ratio of about 11%, hey, I can't get mad at that. That leaves them a lot of room to grow that dividend over the next couple of years. And as we saw, because of their balance sheet and because of their cash flow statements, maybe they're not focusing too much on growth, but if they can consistently bring in higher earnings, they will consistently be able to pay a higher dividend. So something that could be incredibly exciting for a new section of investors in the stock market, myself included, because as you know, if you have been watching my channel, I love getting my dividends every single quarter. Some even pay every month. So I love seeing that recurring money coming in. I reinvest it into the same stock so that it can compound over time. If you're new here, it's referred to as a drip. You let that dividend reinvest, and any good company that pays a dividend will increase that amount over time. It's like magic. It's like a huge snowball that collects the longer that you hold that dividend, because it's going to keep growing year after year. That is my fundamental analysis on PayPal. If I had to give you a rating, whether it's a buy, sell, or just hold, honestly, I'm leaning more on the side of buying more of the stock. Just because of that new dividend, because of the price to earnings ratio. And I mean, there really wasn't anything wrong with any of their earnings or balance sheet statements. So in my humble opinion, PayPal is looking like an incredible buy here at the end of 2025. Like I always mention though, do your own research, come up with your own conclusion. Don't listen to some random guy on the internet just because he said so. That's not something logical people do. Okay, so now that I have given you my analysis on PayPal, I want to give you an update on my SoFi put sold. And I was so certain that I was going to get assigned and SoFi just shot up through last week. It ended up almost at $30 again. Every single day last week was just up, green, up and to the right. It was amazing to see. But needless to say, I did not get assigned. My return on that investment was 1.5%. But let me tell you, it was a wild ride. I was actually in the money at one point. I was so certain that I was going to get assigned. And to be honest with you, seeing how volatile SoFi has been has made me hit the brakes a little bit on these put sold. But now I'm starting to ask the question, I want to have another finance related stock in my portfolio, but now I'm starting to wonder, should I just outright buy either PayPal or SoFi? As for my next move, I'm still going to have a good think about it maybe over the next week, potentially even over the next couple of weeks here through the end of 2025, but I've listed out a couple of my options here. I could sell another put sold on SoFi here in December because I wouldn't mind increasing my cash anyway, because that would again help me bring in some extra cash just in case I do end up buying here in January or late December. I could just buy SoFi stock right now. I mean, I haven't really done a deep fundamental analysis like I have done on PayPal, but just based off of what I've seen, SoFi is not like PayPal. SoFi is a growth stock. They are bringing in, new customers. They are increasing their net income by a staggering amount. I think it was like 50% or something the last time that I did a video. Please let me know if that's right. I'm starting to blank. But yeah, it was an insane number. Nothing like an 11% here for PayPal projected through 3 years. Much, much higher growth compared to PayPal. As for PayPal though, I do have that Leaps option that's going to expire here in about 200 days or so. One option that I have considered is potentially extending the Leaps contract. So I could potentially pay maybe $200 to $300 to get at least another 6 months so that at least it'll run through the end of 2026. Because again, I do think that PayPal stock price is undervalued. I think that it's going to go up over time. It's just they need to prove to Wall Street that they're going to be able to execute. And if they can do that, then yeah, absolutely. I can see PayPal being above $100 by 2028. I don't think that would be a problem or a stretch. The other alternative is to just buy PayPal stock right now, because the only problem with having the Leaps contract is that I would not be entitled to any of the dividends. And again, like I mentioned, I love me some dividends. So it's going to be a tough option here out of these four, but I will be sure to keep you updated here through the end of 2025. I can't believe we're almost at the end of the year here. I'm really hoping that everybody is having a good time here, enjoying the videos. I'm having a blast sharing my thoughts, my opinions on stocks. And again, I would love to get some feedback from you. I've seen a couple of new subscribers, so thank you to anybody who is supporting the channel. It means the world to me. I would love to get your comments down below. Be sure to give me a like if you have enjoyed the video, and as always, I'll catch you in the next one. Peace.